Today we have our review of 3 cheap biotech stocks that are under $5 and have huge upside according to Marketbeat. I'm Hugh from Wall Street X, and starting off our list at number 3 is HOTH Therapeutics, HOTH. The WSX 1 year for this is 175 or an 11% upside. Analysts think it's going to hit $4 this time next year, which is 153% higher than it is today. We put the risk as high, we put the reward as medium. That's going to make HOTH a hold for us. It has a high valuation and uncertain earnings forecasts. They've beat 2 of their last 3 earnings calls. They have low debt levels, and net income is negative and stagnant. Most analysts are a moderate buy on this one, though. Now, this stock is incredibly risky given how little this company has going on, but it may suit investors who are willing to take a gamble on a high risk, high reward security. Now, as it stands, though, we think this one's best to keep as a hold because it's going to be a wild ride while investors wait for news on this. And number 2 is Silo Pharma, SILO. Our 1-year projection is 63 cents or a 9% decline, but analysts think it's going to increase 1% to 70 cents. The risk, just like the other one, is high. The reward is low. We put this one as a sell because it has a high valuation and low earnings forecasts. They've missed their last earnings call. They have low debt, though, slow TTM revenue, and flat net income. Most analysts like us are going to be a sell on this one. And just like HOTH, again, this is an extremely volatile and very high risk, high reward stock, something that comes with the territory of pharmaceuticals, which you'll notice this one is also going to suit investors who want a bit of risk and excitement in their portfolio. And the number 1 cheap biotech stock under $5 according to Marketbeat is ANIX Biosciences, ANIX. Our 1-year projection is 479 or an 8% upside. Analysts think it's going to hit 850 this time next year, which is a 91% upside. The risk is high, the reward is medium. We put this as a hold because it has a low valuation and fair earnings growth forecasts, something the others don't. It has beat 1 of their last 3 earnings calls, and they have low debt, low revenue as well, and a negative net income. But most analysts like us are a moderate buy on this stock. Actually, we're a hold, sorry. While this is generally a better pick over the other 2 because of those higher earnings forecasts, it's still not profitable, and businesses like these tend to be extremely volatile no matter how well they're doing and how big they get. So just like the others, this could be a really good pick for an investor who has a high risk tolerance and is looking for some excitement in their portfolio. And those are 3 cheap biotech stocks according to Marketbeat. If you want to see the top 3 stocks that could explode by 2026, go ahead and check out this video right here. Otherwise, be sure to give this video a like, subscribe if you enjoy the content, and I'll see you next video.